Most buyers today share the same ache in their story. They're working, they're earning, they're saving, and yet home ownership still feels like a mirage. High prices, high rates, low inventory. Affordability is the wall everyone keeps slamming into. So now there's a new idea on the table, the 50-year mortgage. Yes, 50. Stretch the loan, shrink the monthly payment. But does it actually move the needle, or is it just a shiny Band-Aid? Let's break this down with real numbers. For a $420,000 home with 20% down at today's rates, a 30-year loan runs about $2,080 a month. A 50-year loan at a slightly higher rate will run you about $1,970 a month. That's a savings of roughly $110 per month. Not huge for some, but for buyers just under the qualifying line, it's the difference between approved and not this time. That small shift opens the door for an estimated 3.4 million more U.S. households. That's essentially the size of the entire Dallas metro area stepping into home ownership. But every blessing comes with a bill. Stretching a mortgage to 50 years, what does that really mean? It means a much slower payoff, a much higher total cost, about $430K more than a 30-year mortgage, and nearly 40 years just to get halfway through the principal. It eases the pressure now, but demands more patience later. Still, here's the part people miss. Equity isn't only built through principal paydown. Equity is also built through appreciation. Take that same $420,000 example. Assume just a 2% annual price growth. After 10 years, the home's value rises to above $512,000. Despite slow amortization, the homeowner's equity could hit around $190K. By year 20, $325K in equity. Not as fast as a 30-year loan, yes, but infinitely better than the renter in the unit next door. So who might the 50-year mortgage actually work for? Well, first-time buyers stretching to step into the ladder, younger households expecting rising incomes, families in high-cost markets where monthly payments are the biggest hurdle. But let's keep it real. Longer mortgages don't fix the root of the problem. We still don't have enough affordable homes, especially below $260,000, the range where 500,000 listings are missing from the market. Until supply grows, we're just rearranging the same chairs on the same crowded deck. Still, the truth is simple. A longer path is still a path. For some families, a 50-year mortgage could be the bridge between renting forever and owning something real, something theirs, a doorway into stability, security, and long-term wealth building. Because even when the journey is stretched, home ownership is still one of the most powerful wealth engines we have.